Welcome to Cambridge House Live. I'm Vanessa Collette here at the Canadian Investor Conference, Toronto. I'm very happy to be joined by Roger Dent, the CEO of Quinsam Capital. Welcome, Roger. Great to have you here.
Hi, glad to be here.
Now, Roger, what made you make the move to Quinsam Capital?
Well, Quinsam, from a practical standpoint, was a startup situation. I wanted to design a financial institution in exactly the way I wanted it to be created. I'd been a mutual fund manager in the past, and in the small cap space, there were some real flaws with that model. So I wanted to set up an entity that would be stable, tax efficient, and designed to give the best performance to investors.
Now, Quinsam is a merchant bank that's listed on the CNSX.
That's correct.
What do you think of the CNSX?
Well, we're very happy to be on the CNSX. It's a very inexpensive place to list your company. It's a very friendly place from a regulatory perspective to list your company. So we quite like it at this stage of our development. It is less liquid than the venture exchange, or obviously less liquid than the Toronto Stock Exchange. But we don't regard that as being that big a negative. So we're very happy to be there.
Now, Roger, what's your philosophy when it comes to investments? I know you look for value and small cap companies and growth. How do you find value right now?
Well, our approach to start off with is very much bottom-up oriented. So we're looking for inexpensive stories, exciting stories that have not been found by the marketplace. So,
what qualifies as inexpensive?
Well, that's subjective, frankly. Obviously, when we're looking at an industrial company, we're looking at cash flow, we're looking at EBITDA, we're looking at earnings. So we're looking for companies that have either low historic multiples, low run rate multiples, or maybe low multiples on what we would expect to happen in the next quarter or two. From our perspective, a company that's got exciting prospects for 2015 or 2016 is not interesting. We have a much shorter time frame than that for delivering results. But obviously, if you get into other sectors, for instance, say biotech, obviously those measures don't apply. So we're looking for things that are cheap on other basis, comparative basis, relative to where they are in clinical development, things like that.
There's a whole sea of small cap stocks out there. So how do you narrow it down?
Well, we first of all cast a very broad net. We try to meet as many companies as possible. We try to listen to as many stories as possible. We're really trying to find the hidden gems. And the reality is that when you get into this market space, what's reported historically, what you can obtain from databases, often will not find you the best stories.
So what's your key criteria?
Well, usually it's very subjective. Normally, when you sit down with a company, within a few minutes, you can figure out very quickly if the exciting hook is there. So we're looking for something that is not generally understood by the marketplace, something that's got an exciting hook that we think will attract attention in 3 to perhaps 6 months.
And then how active are you with these companies?
Well, we're much more active than most. I sit on the board of 4 or 5 public companies, so in those examples, getting very involved. But we're also getting involved from an advisory perspective. We're looking at helping small companies that don't have a following in the marketplace get a following. We're introducing them to key players. We're helping them craft the way they present themselves to the marketplace, trying to basically help them become properly valued.
Now let's talk a little bit about selling discipline. I believe your fund is fully invested most of the time, so when you find a new opportunity, it forces you to sell out of another one?
That's often the case. Typically we are 90 to 100% invested at any given time. Because of the fact that we're bottom up and we're looking for exciting stories, we find that there's always stories to be found, and usually there are too many things that we think are interesting than we have the money to buy. So,
and what's your time frame usually for exiting one of these companies?
It varies. I mean, obviously, Quinsam has only been in existence for maybe about 10 months now.
10 months.
But we've had companies that have been there for 10 months. We've also had companies that we've only owned for sometimes literally a couple of days. So we have quite a variable holding period. It really depends on how the market reacts to news. It depends on how successful the companies are, and it depends on what better ideas that we find.
What's your take on the resource sector right now?
Well, the resource sector is obviously out of favor. We have really, I think at this stage, only one resource holding. We think there's a lot of value in the resource sector, but we aren't sure that investors are ready to buy. So from our perspective, we're looking for things that we think people will be excited in maybe 3 to 6 months. And unfortunately, at this stage, we're not sure that that's the case with resources. So we'll be very interested and happy to jump on the resource sector once we see some signs that investors are coming back. But we don't want to be the first ones, trying to make that happen.
And where do you see some of the best investment opportunities over the next year?
Well, we're interested in quite a number of sectors. Some of our favorite stocks. One would be Nouveau Research. It's a life science company that has drugs in the marketplace. It also has drugs in the clinic with upcoming clinical news. We think Nouveau is going to deliver good news on both fronts. We're big fans of NTG Clarity. It's a telecom technology company that we think is trading at maybe only 4 or 5 times current year earnings. We think for a technology company with its growth rate, that's an extraordinarily low multiple.
Okay.
Those would be a couple of examples of things that we are pretty keen on over the next number of months.
Great. Well, we'll certainly be watching with interest. Thank you so much for joining us today, Roger.
Glad to be here. Thanks.